way for participants to get education besides like leaning on the investment advisor to come in and do that once in an annual enrollment meeting is to, if you don't mind studying on your own, go to the plan sponsor website. There's like a ton of material. Like for instance, like there are a lot of education videos such as how to save, compounding, and lifestyle investment. So like depending on what stage you are, you can probably find some pretty good information just to start you off. And the other thing I recommend is like calculators. So a big question people ask me, so how much money should I put in my plan? All right, so you put in like what is your salary, how much do you anticipate saving, what your age is, and anticipated age of retirement, and it will tell you how much money you get at the end of 30, 40 years, whatever. And then you decide whether that's good enough or not. So use the calculators there. That's very beneficial. So besides the retirement income calculator that I just talked about, there's also another one called Paycheck calculator, which is like, okay, so if I put away $40 a week, what is the tax impact? Tax impact might not be $40, like maybe just $30 depending on where your tax level is. So there's also like something called a tax calculator. And if your plan sponsor doesn't have that calculator, you can easily Google it and just look for tax calculator, paycheck calculator, and then use that as a benchmark, see what is the after-tax effect for you. I think it's like if you're motivated, there are a lot of education material. Oh, and I want to mention one last thing. What I like the most is something called the gap analysis. Some providers already have it, not all, but I think like the ultimate goal is like hopefully all providers will have it. What it does is that based upon, since the plan providers know quite a lot about your retirement plan, they know how much you're putting in, they also know your salary, and they also know your investment mix. So they can use all that information and project out at retirement. They can also factor in Social Security payouts too, and tell you like when you retire on a monthly basis, on a yearly basis, like how much money would you be expecting from the distribution, and how many years of that would it last before your money runs out. And then also it will tell you, work back and tell you, solve the equation for you if you have not saved enough, how much you should be saving. So let's say I put in like 5%, that's not enough. It will tell you, okay, up it by 7. Okay, or like, you know, your investment portfolio mix, what you're investing in is like probably a little bit too low risk, so maybe you can increase your investment and change it around a little bit. And so instead of average return is like a 4%, maybe you can up it, change it a little bit and change it to like 5%. And that can have a huge impact over 20-30 years. So I would suggest like work on the calculator, some of the education videos, and talk to your investment advisor. Be very proactive. And I think you'll learn a lot and you'll benefit a lot too.